You know that sinking feeling you get when the crypto market suddenly crashes? One day your portfolio looks promising, and the next, everything's down 40%. The headlines scream, "Panic." Social media feeds explode with fear and finger-pointing. You start questioning your entire investment strategy, or if you should have even invested at all. If that sounds familiar, you're not alone. Crypto crashes are harsh, emotional, and confusing. But the truth is, they're not rare. They're part of the journey. And the difference between losing everything and surviving like a pro is what you do during the storm. Let's break down 10 real and practical things you can do to survive the next crypto crash without losing your mind, your money, or your long-term vision. 10. Understand that crashes are normal. Crypto is one of the most volatile asset classes in the world. Bitcoin, the oldest and most well-known cryptocurrency, has crashed over 70% at least 4 times since its creation in 2009. In 2018, it fell from nearly $20,000 to around $3,000. In 2022, it dropped from its all-time high of $69,000 to under $16,000. Ethereum and other altcoins have faced even worse drops, some losing over 90% of their value in a single year. But here's the thing. Every crash so far has eventually been followed by a recovery. The people who survive and even thrive are the ones who accept that crashes will happen again. If you expect them, they won't shock you. And if you plan for them, they won't ruin you. 9. Don't check prices every hour. It's tempting, especially during a crash. You open the app, see the red numbers, panic, close the app, reopen it 10 minutes later. It becomes a loop. But the more you stare at prices, the more emotional your decisions become. And emotional decisions are usually bad ones. Professional investors don't react to short-term price swings. They focus on long-term trends, fundamental value, and risk management. So if you believe in the long-term growth of crypto, zoom out. Look at the bigger picture. Checking your portfolio every hour won't change the outcome. It'll just mess with your mental health. 8. Avoid panic selling. When prices are falling fast, the natural instinct is to sell and cut your losses. It feels like you're protecting your remaining money, but panic selling during a crash is often the worst move you can make. That's when prices are at their lowest. Selling then locks in your losses. For example, during the 2020 COVID crash, Bitcoin fell to under $5,000. Many people sold in fear, but within months, it shot back up to $20,000. And later to $69,000. The ones who sold missed the rebound. The pros didn't sell at the bottom. They either held or bought more. Of course, there are cases where selling is the right move, especially if your goals or needs have changed. But that's a strategic decision, not an emotional one. Know the difference. 7. Use dollar cost averaging. One of the smartest strategies during a crash is dollar cost averaging, or DCA. This means investing a fixed amount of money on a regular schedule, no matter what the price is. It takes emotion out of the process and helps smooth out the ups and downs. Let's say you invest $100 every week into Bitcoin. During a crash, your $100 will buy more BTC than during a bull market. Over time, this lowers your average cost per coin. It's a method that many experienced investors use to stay consistent, especially during volatile periods. DCA doesn't promise quick gains, but it builds discipline. And in crypto, discipline is more important than perfect timing. 6. Keep cash on the side. One reason crashes feel so stressful is that people are often fully invested. They have no cash left to take advantage of lower prices. But if you keep some money aside, what investors call a war chest, you can use it when opportunities come up. Imagine Ethereum drops from $3,000 to $1,000. If you've got cash ready, that could be a great entry point. But if all your money is already tied up, all you can do is watch. Pros understand that holding some cash is a position, not a weakness. It gives you flexibility. Think of it like this. Having dry powder during a crash lets you play offense, while others are stuck on defense. 5. Stick to your plan. Before you invest in crypto or anything, you should have a plan. That plan should answer questions like, why am I investing? What's my time horizon? How much can I afford to lose? And how much of my portfolio should be in crypto? During a crash, this plan becomes your anchor. It keeps you grounded. If you told yourself that Bitcoin was a 5-year investment, then a 6-month dip shouldn't make you panic. If you plan to keep only 10% of your money in crypto, You won't lose sleep if it crashes, because your entire net worth isn't on the line. Investing without a plan is like sailing without a compass. You'll end up reacting to every wave instead of steering in the right direction. 4. Focus on projects with real utility. In every bull run, thousands of new tokens pop up. Some promise crazy returns, others rely on hype, and many don't even have a working product. When the market crashes, most of those tokens disappear. That's why it's critical to invest in projects that solve real problems and have strong communities, active development teams, and long-term goals. Bitcoin is still around after 15 years because it serves a clear purpose: decentralized, borderless money. Ethereum is thriving because it supports smart contracts and thousands of decentralized apps. Projects like Chainlink, Solana, and Avalanche have survived multiple downturns because they offer real infrastructure. Before you put your money into any crypto asset, ask yourself, if the hype disappears, does this still have value? 3. Secure your assets. During a crash, scams, hacks, and exchange failures tend to spike. People are panicked, support teams are overwhelmed, and bad actors take advantage of the chaos. That's why it's essential to protect your crypto before anything goes wrong. If you're keeping your crypto on an exchange, make sure it's a reputable one with a strong history. Even better, consider moving long-term holdings to a hardware wallet. When you hold your private keys, you have full control. No one can freeze or seize your assets. Security also means using two-factor authentication, not clicking suspicious links, and staying updated on phishing scams. Crashes are tough, but getting hacked during a crash is much worse. 2. Learn from the experience. Every crash is a lesson. It shows you how well your strategy holds up under pressure. Maybe you were too aggressive. Maybe you didn't keep enough cash. Maybe you got caught in hype. That's okay. The important part is what you do next. After the 2022 crash, a lot of people realized they didn't understand the assets they were investing in. They chased meme coins, followed influencers blindly, or ignored basic risk management. The smart ones didn't just complain. They studied. They improved. They prepared for the next cycle. Use every downturn as a classroom. Track what worked, what didn't, and what you'd change next time. The more you learn, the more confident you'll feel when the market shakes again. 1. Zoom out and stay calm. In the moment, a 50% crash feels like the end. But zoom out a bit, and things look very different. Bitcoin has gone from being worth a few cents to over $60,000 in just over a decade. Ethereum went from under $10 to more than $4,000 at its peak. These are massive gains, just not in a straight line. Every long-term chart is full of spikes, drops, corrections, and rebounds. That's the nature of high-growth technology. The people who win in crypto aren't the ones who can predict every move. They're the ones who stay calm when others lose their heads. Remember, surviving the crash is what positions you for the next bull run. If you can stay focused while others panic, you'll be in a much better spot when the market recovers, and it will recover. So here's the bottom line. Crypto crashes are not something to fear. They're something to prepare for. They test your patience, your strategy, and your emotions. But with the right mindset, a solid plan, and a little bit of caution, you can survive them and even come out stronger. You don't need to be perfect. You just need to be prepared. Thanks for hanging out with me today. If you found this helpful, go ahead and hit that like button, share it with a friend who's into crypto, and don't forget to subscribe to the channel. We've got more content coming your way to help you become a smarter, calmer, and more confident investor, no matter what the market throws at you.